It may seem boring, it may seem simple, but this step-by-step strategy I've been utilizing for years now, and it's helped me make millions of dollars in the market. And it focuses on just a few key things: the 1-minute time frame, liquidity and inducements, and high risk reward scalp trading. And in this video, I want to show you how repeatable and simple this setup is. In fact, I'm going to show you from 1 week of price action on one currency pair that it appeared 3 times in a single week. So as usual, it's nothing cherry picked, it's from recent price action, and I'm going to show you how it yields positive gains, because each one of these trades is a high risk reward, from 1 to 3 risk reward to 1 to 10 risk reward in a single day. And when you connect just this one setup type on one currency pair, you'll realize on a prop firm account, you can very easily achieve 10% per month. And depending on the capital you have, this can be thousands of dollars a month following one simple approach. In fact, if we look at my own performance, over the last year and a half, I've been giving my trades live ahead of time with the exact entry, stop loss, and the full breakdown. And in that process, I documented over 60 trades and 59.5% gain. And every single one of those trades relied on understanding inducements and connected to this exact setup that I'm going to share with you today. So in this complete strategy masterclass, I'm going to be sharing with you the full step-by-step strategy, starting with what is liquidity, what is an inducement, connecting it to the lower time frames, where I'm going to be showing you diagrams, case studies, and walking through price action of a single week, showing how much money you could have made if you followed this simple blueprint. So without wasting time, let's jump into the price action, where I'm going to show you a breakdown of all of the trades from recent price action. 3 trades in a single week, all high risk reward. It all starts with the daily time frame. And with the daily time frame, there's only 3 main objectives that I look for, step by step. A lot of people focus on the higher time frame, spend hours on it. In our case, because we're 1-minute time frame traders, we're high risk reward intra-session traders, that is going to be identified with the main push. So for example, in a trend where you have bullish price action like this, we know the main push is the last higher low that made the higher high. That becomes our main push and the dealing range connected to our overall bullish trend. And when we glance at this on a higher time frame, we can see we were in a bearish market, a bearish trend, a sequence of lower highs and lower lows. And then after that, we had a strong push up. This one not only broke structure, broke structure, broke structure, it initiated a main push bullish and formed a higher high. Then we had a bit of a retracement, a sequence of lower highs and lower lows to form that complex pullback to then make the higher low overall. So we had push, retracement, push. So we know that we are in a bullish market based on that trend. Now, when I drop down to the daily time frame and focus in on that last main push, we can see that it's broken down. It's not one straight line. We can see that we had a buildup of liquidity here, an inducement over here, and a mitigation. That low led to a push out to take the previous high in the market to be taken out to form a new high. Perfect. So we know we are in a bullish market because we're having inducements leading to main pushes. Then we see that this retracement leads to a higher low that goes on and breaks and forms a new higher high. This is the last main push. This is the last high in the market. So I'm looking for that new territory, and when I see that this was the main push, now I found step number 1. What is the direction and trend, and what is my main push? Where I mark the low and I write that as my external low, and I mark the high where I write that as my external high. Once I've done that, I can just zoom into this area, and anything above this line and anything below this line, not important, not interesting, because it's not going to affect the price action inside this range. So now that I found my push, now that I found my direction, now that I found my range of high and low, step number 2 becomes points of interest. And that's going to be very simple, where I look for the extreme, the origination point of the higher low that made the higher high. So I just put that green arrow. That start point I can put as my extreme demand, and then the area that was responsible for the break of structure. So we see that this is the last high in the market. This is our last external high. We see price retraces a little bit before breaking structure. So we know this area over here was responsible for that break. That's the last retracement before the break. So that area becomes an area to focus on, and we call it a decisional. And now within my main push, I've identified the 2 points of interest, the extreme and the decisional, and that concludes step number 2. And step number 3 lastly becomes liquidity. That's the last thing I need to look out for the higher time frame read. What I'm noticing here is we're getting a lot of consolidation around this high, a lot of taps into this high. So when I see this for me signifies liquidity. When I've got one significant touch here, another touch here, and I'm getting this region over here, another touch here, I'm seeing a lot of resistance, a lot of sellers, a lot of orders in this area. This looks like liquidity to me. And then also this very obvious trend line with multiple touches. This looks like obvious liquidity to me. So I mark it out and we can use it to our advantage later on, but we're just building the framework for now to set us up for the lower time frames. And that's that. The higher time frame, simple glance, 3 simple steps, and we can move on to the next time frame. Now, as we are going through this video, I'm sure there's a lot of terms that maybe you're not familiar with, and you want to have a step-by-step guide from exactly zero, from the ground up. What is a higher high? What is market structure? What is liquidity? What is inducements? That's why I've prepared a 3-day course, a step-by-step plan from zero to hero as a profitable scalper strategy. We cover over 1,000 slides, and it's a full video production going through step by step, and it's going to be sent directly to your inbox. It's absolutely for free. We don't need anything from you, so you might as well download it with the link in the description. So now that we've understood the objective of price, let me show you in a diagram what we're exactly looking for. So we first understood that trend, right? We understood we were in a bullish market. We found that bullish main push from higher low to higher high. When we explored it on the lower time frame, we of course saw there was internal price action, and we saw something like this, where we had the previous high in the market, the previous higher high, that made this higher low over here, that went on to make the higher high. We're in a bullish market. Our main push is very clear to see because it's from this higher low to this higher high. So therefore our main push bullish becomes this, and that obviously leads into our dealing range, which means that's our external high and external low. Perfect. Once we're done that, we found our extreme point of interest, which is obviously the demand area at the low. And then this area over here, the last retracement before the break of structure. So the break of structure was here. This guy was responsible for that break of structure. So I mark that out and say that becomes my decisional. So we have our decisional and extreme, our 2 points of interest, and that's where we've arrived to in our analysis. So once that is established, then you expect a bit of a retracement. Price was not going to fly in one direction forever. So we know that price may retrace, but the overall goal is for price to make a new higher high, either from the decisional or from the extreme. Because we're in a bullish trend, we found a bullish main push and we look for a bullish replication. So we know the direction we're looking for, and we know therefore the ultimate target is to take out this external high. So I know if I've got a big magnet over here that this is where the money is going to flow in the trend, what do I need to look out for? I need to wait for price to come to one of my decision or extremes, my points of interest, and then it may chop around. And that's exactly what we've seen in the price action. And when I marked out the liquidity, we said, okay, there was a liquidity of a trend line. There's liquidity at the highs, but what is the goal? What is the objective of price? Well, it's unlikely to go all the way lower. That's a trend shift. We would not expect that unless something drastic happens. So what is the realistic roadmaps? If we've already arrived to the decisional, which is one of the points of interest, it could be either we directly make a high in the market, because that's the overall goal, to take out that trend, or it could be temporarily we come lower to our extreme demand area, which is not touched yet, and then go on eventually to take out that money at the external high. So either way, we know we are going up to form that external higher high to take out the previous ceiling in price. It just depends. Is this liquidity at the top enticing enough, or is this liquidity at the low enticing enough to understand control? And then knowing, are we going for this one or are we going directly to make a new higher high? That's what we need to understand. We don't guess. We don't pick based on the higher time frame. We explore the lower time frames. We see the story that price is telling us, and we're going to be following the same blueprint, looking for liquidity, looking for inducement, looking for time. These things that I always speak about, I'm going to show you once again, step by step, how clear and simple it really is. So now that I'm on the 4-hour time frame, I'm looking for control, and control is going to simply be inducements. When I see over here a buildup of liquidity, inducement, and a push out, shows me buyers are in control. Once again, buildup of liquidity, inducement of that structure point, bullish push out. Buyers once again in control. Same over here. Very small buildup of liquidity. We see this inducement in the decisional led to a break of structure of the external high previously. So buyers are in control. And this happens again and again. Here we see a buildup. Here we see another buildup. Here we see the inducement. Where did that inducement go? Into our decisional point of interest. So the first destination is met. So as we arrive into that decisional point of interest, we can see price does a buildup, does an inducement, strong push out. What does that tell us? Buyers are in control because we grabbed liquidity into the point of interest, made a push out. What happens once again? Build up of liquidity, inducement into a previous demand, bullish push out. And it goes on and on. So we just read the story that price is telling us and we try and see what's going on. And I see it once again. I see that we have a 1-touch, 2-touch build up, inducement. What does that inducement do? Lead to a bullish push out. So this is all painting a story for me, telling me that the buyers are in control. What do we see over here? We see a wick getting induced, leading to a push out, leading to a mitigation, leading to another push out. So every time there is a bullish push out in the market, every time we form a new internal high, it's after one of these inducements. We look back the whole way. So when I zoom out and I look at the main push, where I know the external high is the target, because we're in a bullish trend, we're looking for a bullish replication. That bullish replication may be happening from that decisional to form a new higher high. If that is the goal, and then I see inducement number 1, inducement number 2, inducement number 3, inducement number 4, 5, 6, 7, 8, and I'm seeing all of these signs of bullish control, Then we have higher time frame trend, and we have inducements on our side to show the buyers are in control, and then a pool of liquidity with 1 touch, 2 touch, 3 touch above. We have an obvious resistance level, triple top. Sellers are going to be getting in. We see that liquidity, and we know that the target is overall over here. So let's drop some magnets of potentials of what could be happening. These highs in the market is an obvious liquidity pool to potentially target. And our overall goal for the trend is obviously to make that external high, to make a new bullish main push in a bullish trend, to make a new bullish higher high. So we know all of these things are now connecting together. So now that I've added all of the relevant annotations of supply and demand and structure and so forth with these inducements, we can see that this decisional that led to a higher high, price did a smart money trap, induced into that decisional, made a new higher high. So everything is now populated, and we're starting to understand where is control. And we can see clearly based on all of these 7-8 inducements, the buyers are in control, and the last target becomes to maybe just make that higher high. So take out this obvious liquidity that we see, take out that magnet, and complete the trend that we're seeing that is decisional, leading to a higher high. It's a very simple market structure. But now let's focus on the lower time frame to see who's in control and that story in action. So first of all, this trendline liquidity we were speaking about, we can see it gets induced over here. We see we have this buildup of liquidity and the trendline. So those trendline traders are now been taken out of the market, and we have a strong bullish reaction. When I see price now makes this high, I know that I'm in a bullish market in the higher time frame, bullish market in the lower time frame, inducements on my side for the buys. So therefore I know any seller signs is usually going to be a trap. And when I first of all see that we have a buildup of liquidity and a sweep, but it's in no man's land, it's not important, this all becomes a smart money trap that gets taken out. So when I read all of this picture together, I start to see price comes into the decisional that led to this push out, price taps into it. When, look at my gray box, key time window. And let's read it through, and we see after that point, we get another inducement that leads to a push out, another inducement that leads to a push out and break of structure, another inducement that leads to another push out. So when we see every time price goes higher is led by an inducement, and I can connect them together and say inducement number 1, inducement number 2, inducement number 3, inducement number 4, inducement number 5, inducement number 6, it goes on. This is really showing me that the buyers are in control, and anything that happens from the sell side is usually going to be a trap. So even though I see a build up and a sweep over here, it's against the trend, it's against the higher time frame, it's against the lower time frame, there's no supply zones. These are obvious traps to avoid. And this now takes me to the week of action, right above our external high, the target that we had in mind. And this now walking through step by step, all of these inducements, 7, 8 and so forth, 9, these all arrive me to the peak moment, which is right before that external high is being taken. So as we complete the sequence and we see prices inducing after inducing after inducing, we see we are approaching our external high. The higher high in the market, in a bullish market, should make a new higher high. So we're right there. So any signs of sellers would not make sense in a bullish market, because a higher high is not a supply zone. A higher high is a trap. So I want to be seeing sellers getting trapped in the market, and then we look for buy opportunities. That's exactly what I did. Now I can bring in my intra-session timeframes, and I can bring in my daily cycle variations to read it through. And it's going to start off with reading our Asia range. What is Asia range telling us? It's telling us that we have taken out a high of previous day with an inducement. Why? Because we had a buildup of liquidity, inducement and mitigation, and then push out. During Asia, this is really strange, especially to take a high of previous day liquidity. So the buyers are clearly in control. And when I read it further, I see that a sweep of Asia high becomes a trap because it fails to go anywhere and then gets taken out. So what is this showing me? Sellers attempted to sweep and get in. They got taken out. Therefore, the buyers are still in control. Who's the controlling inducement? Is the one down here. So this is now leading the show. And then when I arrive to my New York open and I've seen that the price has only been bullish right before my higher high, right before my external high, I see that price tries to sweep. When does it try to sweep? On New York open. As you know, that is a trap time. So when I see that this equal highs and sweep is at a trap time, I know this is fake. And when I see a buildup of liquidity below, then I'm thinking this is a very nice framework where I can have a buildup of liquidity, inducement into a demand area that led to this push out. So it's an extreme on the 5-minute time frame. If I can have this buildup getting induced, and in my New York key time window, I can get a confirmation. I can buy not only to now make my external higher high, but also take out this trap along the way. Manipulations getting engineered in the market. So let's play to our key window and see exactly what happens. So let's pause it right here. Price has now taken that build up liquidity. So we've got a sweep in action because of these highs. Smart money traders are waiting. They're waiting to get in because they've seen a build up of liquidity. They've seen a sweep. They've seen a bearish break of structure of this getting taken out. They're going to look for here in the New York key window, and they're going to look to sell. Very obvious that this is going to be a trap because we know that the external high is right above. The market intention is obviously bullish. Now, before I break this down step by step, let me show you a diagram on how to trade this model that I'm showing you step by step, and then we're going to show it in action based on this price action. So as we've updated the picture now, we can start to see price has just started to go into this area right before the external high to grab this liquidity, and it's landed in the decisional. So now we know that we had a main push bullish. We had a retracement into the decisional. We showed bullish sign after bullish sign. We are right here. The next goal is obviously to make a higher high to follow simple market structure of higher highs, higher lows, higher highs. And we're sitting right here. And really important to see along the way, we saw inducement after inducement after inducement after inducement after inducement after inducement, all showing buyer's strength and no seller's strength. So all of these things connect together. But the last piece of the puzzle is to share with you the execution model, the inducement model that I've been speaking about. And what that looks like is very simple. If we get price action, something like this, consolidating, this is showing me that there is a level of support in the market because of 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, this level of clear, obvious support from a retail trader perspective. What do I know? Well, there's usually going to be liquidity in this area because a lot of people will be buying over here and putting their stop losses below. So after that, when I see price shift and take out that liquidity and then go and actually make a low, and then price may go on to test and then continue lower. So we're seeing a high in the market, made a lower low, made a lower high, made a lower low. But the key here is that this support level that I'm seeing as obvious liquidity has got tested. That's the key. And what later may happen is price now continues to consolidate around this area. And what was now a previous support level became an obvious resistance level with 1 touch, 2 touch, 3 touch, etc. We're getting multiple touches. This becomes now a resistance level. So the support level became a resistance level after a break of structure. That's the key. So we had this high in the market that went on to make this low in the market. We had a bearish switch, and now we should expect bearish continuation, right? Well, the key of the model becomes that once you've had that break of structure bearish and that support level turned to resistance level, what we now look for is a inducement. Meaning after that test that we spoke about previously and that resistance level that's been formed, I look for an inducement to take out the liquidity that was above. Why is there liquidity above? Because all of these sellers that were entering on this resistance level, their stop losses are going to be above. So just like the support level provided liquidity, so does the resistance level. That gets induced, and then we go on to make the lower low as we expected. So the bearish trend of lower low, lower high, lower low, simple market structure as you expect. But the difference became that this inducement that took out the test and resistance level was the one that led the show in that bearish market. So that's the model we're looking out for. And if this key inducement, which is one of my trinity of time, lower time frame confirmation, and inducements, if that trinity happens around this inducement where I'm getting key time window and lower time frame confirmation with the trend that is established, this becomes a very repeatable key setup. Now on this channel, I really enjoy giving strategies and information and all of these things that have helped thousands of traders across the world. We see it all the time in the comments of people making payouts, getting funded just from these videos. But I've also come to realize that information is not always enough. You need a helping hand to walk you step by step to see how you can see it every single day applied in the market with live streams, Q&As, one-on-one coaching, and everything in between. That's why we created the inner circle within WWA Trading, where we have one-to-one mentorship, live calls during London session and New York session every single day, and even a chance to sit with me on a Q&A session on a weekly basis. Here we have a full incubator where we've had hundreds of traders find success, get funded, get payouts. So if that sounds interesting to you, go ahead and look in the link in the description where there will be an application form. Okay, so as we approach this level now, we can start to see that we're getting similar things present, where we are getting a range where we spoke about the lows and the highs of the range, an inducement to the high, which is a trap because it's not aligned with time. It's at a trap time and it's not aligned with the trend. And then we see price shoot lower to induce this level. Now it's induced into my extreme demand that led to this push out, and we've arrived to the extreme. And now I want to connect it with my time window box approaching my key time window. Then the trinity is presenting. I've got an inducement into my demand. Step number 1 of the trinity. Number 2 is key time window approaching. Step number 2. Step number 3, can I get lower time frame confirmations? Let's confirm that. And as you know, one of my favorite lower time frame confirmation entry types is price goes lower. We get a 1 leg, we get a 2 leg, and then I enter based on the second leg over here. I get 1 push up, and then I get a second push up. Once I have those 2 legs, I can enter based on the second leg. That's what I'm looking for. And when I zoom in, I can see exactly that. So we had that inducement into demand. Once that inducement was met, we had the first push up over here. We've now had the second push up over here. So now we've got the 2 legs that I need. Leg number 1, leg number 2. And once I've got that 2 leg protocol happening with the key time window right around the corner, this becomes an entry opportunity for me where I can put my entry on the refined IFC, stop loss at the low, and I can now take that to trade it towards at least that trap, but overall, whereas the goal to that external high we were speaking about to make that higher high. Break-even protocol will be always the same upon the M1 shift. That's where I break even my trade and I take the risk off the table. And then I'm obviously going to strive for my standard take profit systems, which is going to be at my 1 to 3 risk reward as always, TP1, and then TP2 being at 1 to 10 risk reward, which is after that trap. So now that all the trade management is done before the entry, now I can just watch price and let it play out in my direction. So price taps in exactly on the refined IFC because that is the objective of price. And then I wait for the shift in my direction. I can now break even because it's hit the break even protocol. Key time window kicks in, goes towards TP1 very soon at 1 to 3. This is the beauty of intra-session trading. It's just tap and go. You don't sit in hours of drawdown. You're not waiting for price action to present for weeks on end like a swing trader would. And you're not holding the trade for weeks on end. You're holding the trade for just 30 minutes, 1 hour, 2 hours. And here we can already see from the entry point to where price is potentially hitting the 1 to 3, it's happened within 45 minutes. Your break even within 20 minutes. So there's a lot of mental clarity and psychological edges happening here. And then price shoots through that trap that we spoke about, 1 to 3 taken. And then where is the objective of price? It is to make that external higher high. That was the objective of price the whole time. And we were able to buy in a supply zone trap because a lot of sellers would be interested in this area. We can now buy through, eventually hoping for that higher high to be formed. And there we have it. Price has now formed that external high. And then slowly but surely, price goes on and hits the 1 to 10 target also, meaning if you take 50% of your volume at 1 to 3, 50%, the remaining volume at 1 to 10, you secure 6.5% in a single trade, lasting just a few hours, following the principles of time, lower time frame confirmation, and inducement. Now, once this framework is set and we made a higher high in the market, now what is the objective? If price has now made a bullish higher high in the market, the magnets have been met, how does price move? You make a high in the market, you have the retracement to the decisional, you go on to make a new higher high. Right? So now we have a clear objective of price that we formed the higher high over here, and we are now continuing and finalizing that bullish trend. So the trend is still on our side. We need to capitalize on that last extension of that bullish trend. So let's fast forward to the next day and see if we can get an opportunity. So now we've let Asia range present on the next day, and we can start to see there's something interesting going on. So I'm going to walk through exactly what's happening here. If we're getting a build up in Asia and we're getting an inducement and we're getting a push down and we're getting a break of structure, this is interesting to notice. So from the setup we spoke about, when we see a break of structure, we find the associated support level. That is over here. And when we see that support level has now had a break of structure, this inducement led to a break of structure, we formed a lower low. We can see that internal price action presenting where we have push down, retracement, lower low, retracement. So we're getting the things we need to show a bearish sign, and we're arriving to a weak area because that's not a decisional. So where could price be going after making that high? Well, we could be going down towards these areas. For example, we could be going towards this area over here. Why am I interested in this area? Because this is the last pullback before we broke structure. As we know, that is the decisional, the last retracement before a break of structure. So price retraced, induced as we can see, and then formed the higher high. So this is now a decisional point of interest. This one is not a decisional or an extreme. It's just internal price action. So I can say this is more likely a trap, especially with how close it is to Asia range. And maybe price could induce into my decisional and then continue higher with that bullish trend. So when I see the framework of the day and I look closely, I see, oh, this is showing me the signs that I wanted, where I'm getting not only the support level, now we're getting that resistance level. And now I'm getting the building blocks of the setup that I wanted to talk about, which is when we have a break of structure, price not only breaks structure, it tests the support level and then continues to have that resistance level range. And when I see the day starts, after Asia range, we're getting that inducement. So wasn't that what we just spoke about? We see price consolidating to form that support level. Once we have the break of structure, we test it to then make the resistance level around that area. So support turns to resistance after a break of structure. We wait for a inducement in the key time window with lower time frame confirmations to sell and make that lower low. So that's basically what we've got. We've got that support level, we've got the break of structure, we've got the resistance level, and we've got the inducement happening. So if I can get lower time frame confirmation and key time window, this can become a sell opportunity. And especially because we've got this trap, supply and demand trap below. I know I've got clear targets of not only this equal lows as liquidity target along with Asia low, 2 pools of liquidity, perfect, and a trap zone right below, perfect. I know all I need to do is get my key time window and an entry. So what I'm going to do is wait for London Open to present, and I can really see prices holding this liquidity. Look how many touches we're getting. We're getting one touch over here, another one over here, a few over here, another one, another one, another one. This is a very clear liquidity level and a target for price to go through because we've got inducements on the high side. And now price has reached a point where we are really squeezing, where we've got this trend line liquidity to target like so, and we've got this equal lows target below and London Open a few minutes away. So what I really need to look for is an entry, and the entry is going to look like, if I know that these inducements are in control, I look up and I see, oh, this inducement is also in control. I've got consecutive bearish inducements on my side, plus the model of support turn to resistance with an inducement. I've got a lot of sellers on my side and liquidity targets below. I just need to get in with my key time window. So what do? I'm going to put my entry like so. Because I don't have an imbalance or refined IFC to target, I just need to take out a liquidity pool, which is right here. And that liquidity pool is connected to this trendline liquidity. So if I can now induce into my zone of preference, which is to be respecting these connected inducements that I can see, if I'm tapping into that area, then I know in my key time window I can get in based on these inducement supply points and take out liquidity with an inducement. So let's see. Going to play a few candles. London Open, bang. Okay, perfect. We actually take out that liquidity that we spoke about. So that's taken the trendline liquidity also. And now we are within the territory of these inducements. So I've got now a 3 pip stop loss, a sharp entry on the minute of London Open. No one can deny that time is not important when on the minute we induce and then we start to get price collapse. And therefore, as always, the break-even point is going to be after a M1 shift. And then we have our standard trade management at 1 to 3 risk reward. We take a partial like so, and then the 1 to 10 becoming TP2. So we can see that this one was even sharper. We were able to get a 1 to 3 risk reward in 1, 2, 3, 4 minutes. So in 3 minutes, you are break even. In 4 minutes, you are at 1 to 3 risk reward. You take a partial, you lock in 1.5% gain in just a handful of minutes. There's no issue with psychology because once again, it's tap and go, high win rates, high risk reward, and following the model of support, turn to resistance, getting induced with time, lower time frame confirmations. Everything that we speak about on the minute of London Open, this simply cannot be denied. And this is not cherry picked. This is all from the same week of recent price action. Now, once we've concluded that, what do we see? The roadmap that we spoke about is if we have a trap over here, what do we expect at a trap? Well, we'd expect buyers to get in and start to give buyers hope. And if the buyers get hopeful, they present liquidity and orders, and that becomes another target. So that's what I'm going to be looking out for. We call it a buyer's trap, especially on a false demand area. So we arrive hopefully lower into that demand area. Buyers get euphoria. They see these bullish candles. They're jumping in. Buy opportunity for all of these false market structure traders. And they're going to fall for the trap at some point because all of this is obvious liquidity. And it keeps developing that level, giving more and more hope to the buyers. Now the buyers are really excited because they've seen internal higher highs and higher lows. We obviously know better, because we are going to be trading and understanding that the sellers are in control with this inducement on our side, which was our entry, which has now led to a whole supply block. So we know price is effectively tapping into that supply block right now. Therefore, it's imminent that sellers should take control and continue that trend. And there we have it. Price has now taken out all of this liquidity after touching the destination of supply. And now we are inducing this level that we spoke about previously. This false demand area has now been induced and we are shortly approaching our New York window. So I want to see how that presents. After we take the liquidity of all of this trend line and that demand area, the false one, we now get an inducement. And you may be thinking, well, why don't we get in? Why don't we take that trade? Especially when we have a 1-leg, 2-leg protocol entry. It's got the inducement, it's got lower time frame confirmation, but time window is not there. Becomes an invalidation for me because, as you know, restricted trader is profitable trader. So I'm not going to be jumping in randomly. I'm going to follow my rules until the next trading opportunity, which is going to be the key time window. Now, this is where you need to get really technical because yes, we have an inducement on our side and we're getting consecutive mitigations. We're getting 1 mitigation, 2 mitigation, 3 mitigation, a slight inducement of that level over here, respecting overall that inducement demand. That inducement that took out the early buyer's trap and the demand area has now led to a whole demand area that we can respect, and we're seeing inside of this area we're getting build up and inducement. We have this clear build up of liquidity and we get a clear inducement right before our key time window. So once again, I just need to follow the protocol. I've got inducements on my side. I know the direction. I've got all of this liquidity to target now. Very clear and obvious trend line liquidity. And if I've got this inducement on my side just now before the key time window, then I just need time window to present and lower time frame confirmation. I can look to buy, but the overall trend is, remember, bullish from the higher time frame, the lower time frame, all of these connected inducements since the beginning of this video we spoke about. We are just looking for the next opportunity. And remember, you don't sell at Asia high. Asia high is not a supply point. That's why I've put caution. So as the key time window presents, our bias is bullish. We're seeing bullish inducements. We're seeing bullish structures. We have liquidity targets. This becomes now a great opportunity. We just need to find the entry. And this is where you need to really pay attention and focus. First of all, this inducement led to a push out, breaking the previous ceiling in price to have a bullish break of structure. Why is that important? Because this is the last lower high that made this lower low for that inducement to now make a higher high. Or overall, we are getting one bullish push up and then second bullish push up and then third bullish push up. So when we see that we had the previous higher high of this push up now taken out to make a new higher high, we have now found that dealing range we spoke about. Remember, where we have the low of the range and we have over here the high of the range. So if we're in the key time window, we've got this inducement and I just need to find an entry. Where is the entry opportunity? Well, it becomes either at the decisional or extreme. The extreme is obviously where the inducement is down here. That would become the extreme buy opportunity. And then the decisional becomes the guy responsible for the break of structure. The last pullback before the BOS. So it's going to be this area right here. Now, if we start to see the signs after that break of structure, where was the resistance level? Right here. And then once again, we see the test. We see after the break of structure, we see the test. Once we see that test, we know that is now forming a support level. And once you've had that support level established, we've now got our decisional demand area and we are just looking for that inducement. So once I can see that inducement, that becomes the buy opportunity, enhanced by the fact that this is also a supply and demand trap, because people are going to be seeing that earlier on we formed a lower low. We now know this is an inducement. People are seeing this is a lower low. They're going to be saying this is a supply zone looking to sell. We know otherwise because we know that the buyers are in control based on this inducement, and therefore that inducement becomes the entry. And that's exactly it. So we saw the break test inducement where we had a break of structure, test, and then we induced it. That's exactly the model, where resistance level with the test became the support level. We wait for that inducement and that becomes the buy opportunity. As always, we break even at the M1 shift, and then at 1 to 3 risk reward, we can have our partial and let it run for a 1 to 10 if it plays. Now we are just capitalizing on the last portion of that bullish trend. Break even after a few minutes, 1 to 3, pretty effortlessly. And we can notice all the signs of control. Who is in control right here? If we get this inducement, push out, mitigation with another build up inducement, and then a push out, we can start to see the buyers are maintaining control after our entry, and therefore that becomes the next opportunity. So when we look back in the space of just 1 week, we had a few key opportunities where we're just following the principles of time, lower time frame confirmation and inducements, where we're following the support turn to resistance with an inducement, or we had the opposite here where a resistance level turned into support and we induced it. So the same thing again and again. But the key thing here is that in the space of a week, we had a 1 to 10, a 1 to 3, and we also had another 1 to 3. So this trade, based on the trade management, at 1 to 3 risk reward, you take half of your volume, and at 1 to 10, you take the other half. We know total, this trade led to a 6.5%. This sell over here was only the 1 to 3 risk reward. We only took a partial, and the remaining hit break even. And then the last one over here also hitting that 1 to 3. So when we connect it together, 6.5 plus 1.5 plus 1.5, this equals in the space of a week about 9.5%. And of course, over time, of course, there will be wins and losses. So you'll have about a 60% win rate with this kind of setup, a trade frequency of at least 1 a week. And with this trade model alone, you're able to extract around 10% from the market pretty confidently. Why? Because I've been doing it for a year and a half with my public signals. And in general, I've been trading for a decade. These kind of things are key. But as you know, all strategies have its winning moments and its losing moments. There's always pros and cons. But the key to profitability, as always, is that if you're a restricted trader, you'll be a profitable trader.